Thinking about retiring in the great state of California? Well, you're not alone. Are you aware that 1 of every 10 retirees resides in California? Tell me that's not crazy. That one state, 1 in 10 retirees resides in the state of California. So let's dive into what their taxes look like. I don't know. It'll be interesting to find out. Welcome again, my friends, to the Heritage Wealth Planning YouTube channel, the place where you come to learn about taxes for retirees in California and the rest of the 49 other states as well. We dive into one by one to give you the best place to retire from a tax perspective. Now, there's lots of other stuff on the YouTube channel as well here. Tons of other things on Social Security, on financial planning, Roth IRAs, investing, estate planning, all that too. But this is just a playlist for each individual state. And when we wrap this up, we'll give you our top 10 choices for retirement. But we got to go to California first because it is the most populous state for retirees. Everybody else too, but still for retirees. So let's look into it as we do. Kiplinger's. I will be perfectly honest with you. This is my second take on this California episode because initially I said, California, the tax can be crazy high. And then when I did the first take, I was quite taken aback. California is not nearly as bad as what we've been led to believe. Just goes to show you there's more than meets the eye when it comes to taxes. And if all you're listening to is local media rants or something like that, you might miss the boat. So Kiplinger's gives us these 5 quintiles. We have 50 states, and there's a quintile for the top 10, blah, 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 blah. California falls right in the middle of the quintile. Not tax-friendly, but not tax-unfriendly. And it's right smack dab in the middle, and it's mixed. So let's dive into it and see why they give it a mixed rating as opposed to any of the other ratings that we have. Bottom line, so California has the highest tax rate in the country at 13.3% for millionaires. Now, again, that's not net worth. That is on income. Remember that. And while it doesn't tax Social Security income or railroad retirement benefits, all other retirement income is fair game. Sales taxes are high as well, but there's a significant bright spot. If you're over 65, you get to claim an extra 110 exemption that comes right off your tax bill. It reduces what you owe directly. So as a credit is what it is, $110 credit being over 65. The state sales tax is 7.25%, and localities can add as much as 2.5%, whereas the tax foundation says the average combined rate is 8.25%. Low tax of 1% on $16,000 taxable income for married filing jointly. So remember, I wish I had my calculator. $16,000 of married. If you're married filing jointly, you have $16,000 of income. Taxable income, that means you can have $42,000 of gross income before you have any taxes due in California whatsoever. And anything, and that would be subject initially to a 1% tax, which is a huge, all right? Because remember, you have $26,600 of standard deductions under the new Trump tax bill. And the standard deductions just comes right off the top line. So you have $42,000, take out the $26,000. That 26, yeah, it gives you $16,000 right there. So $16,000 of taxable income, it means $42,000 in gross income before you pay any taxes in the state of California. So just keep that in the back of your mind. They do have a high tax on higher, wealthier people. And then the effective rate is only 3.1 for individuals and 5% for joint. Social Security benefits are not taxed. Another reason why you got to be doing Social Security benefits, my friend. Planning benefits, I'm telling you, I've done these episode after episode after episode, and Social Security benefits just across the board are not taxed. And if they're not taxed at state and they're taxed much, much more favorably to the feds, you can be leaving a lot of tax on the table if you're not doing some serious Social Security planning. All private, local, state, federal pensions are fully taxed. There is a 2.5% state tax penalty on early distributions from retirement plans, annuities, and IRAs. So not only do you have the feds to contend with on if you take a distribution from an IRA before 59.5, you got the great state of California as well, and that applies to IRAs, 401ks, and annuities. It does not apply to private pensions because you really can't take a distribution from a pension. It just comes out as income, and income from pensions are fully taxed, and public pensions are a tax as well. So, California is an equal opportunity taxer, at least. They tax everybody, which, there you go. Property taxes, California's median home value is $412,000, of which its property tax is $31.60, which would be about 0.75 would be the percent, which is pretty low. Now, they had a Prop 17 or something like that back in 1979 I forgot what it's called. That I don't know how much that skews the property tax info there, because that was pretty significant actually. That Prop 17 or Prop 19 it stopped. It said we're not going to increase your assessments anymore. Thus, your property taxes are going to be based on what your property was back in 1979, which is pretty crazy. Don't get me wrong. It had a very favorable effect for people who are grandfathered in. The minute you sold the house, though, the buyer would have a huge incentive or a huge property tax increase for sure. So it seems like it had a great incentive for you to stay in your home, and it did. The question is, a buyer's going to be like, I'm not trying to pay all those property taxes. So it's an issue, and I'm not sure if this has been skewed here or not. My presumption probably has. Tax breaks for seniors. Governor reinstated the property tax postponement program. Say that 5 times fast, which provides property tax relief to senior citizens with revisions. Senior blind disabled citizens with an annual income of $35,000 less and 40% equity in their homes can defer payment of property taxes beginning in 2016. You see, again, deferring payment is different than actually having credits or tax exemptions, homestead exemptions, for instance. So it does not look like California has a homestead exemption. Vehicle taxes, California charges an annual fee that functions much like a property tax. The tax is 0.65 of the actual purchase price and is reduced for the first 11 years of ownership. For example, the vehicle tax on a 2-year-old vehicle purchased for $25,000 would be $147. So that's not, that's higher than what we do here in Georgia, but that's not huge. Okay, the no state or estate or inheritance tax. Okay, so now let's see what Kiplinger said. State of California, right there. And see what Tax Foundation says. Excuse me, did I say Kiplinger's Tax Foundation? So let's see what they say. Top individual income tax rate, 13.3. The state and local tax burden is 11, which ranks number 6 in the union. So California, from an income tax perspective, is one of the highest out there. Tax Freedom Day is May 1st. It ranks 46, so that's not very favorable for sure. So they can get you from income tax for sure. But again, if the bulk of your money comes from Social Security, and I'll show you an example here in a second, you might be surprised. Sales tax, the highest sales tax in the state, ranks number 1. When you factor in the localities, it's still in the top 10, not the highest though, but still in the top 10 at 8.54%. So income tax is high, state tax is high. The gas tax is huge, 53 cents a gallon. Number 2, and then of course, shot me there. Cigarette tax, almost $3 a pack. Number 9. So just high across the board there in California. Property taxes range 0.76, like we talked about, and that's 34 in the union in terms of the overall property tax rate. The dollars that you pay is higher simply because California property values are higher for sure. So property taxes are favorable. Sales tax is 9, income tax, it could be, it just depends on where your income comes from. So let's go to that. Let's go now to smartasset.com. We'll go to the great state of California, and let's find from where the income comes. It'll be from where your taxes come. California fully taxes income from retirement accounts and pensions at some of the highest income state tax rates of the country. Social Security is exempt, and it has some of the highest sales taxes in the U.S. as well. So let's start with saying, like we always do, $25,000 in Social Security, $25,000 in IRA distributions, and you're married filing jointly. Let's make sure you don't have a pension there. We do not. And let's see, we got $50,000 total income. So $50,000 total income, of which 25 is Social Security, 25 is from an IRA distribution. You're all going to pay all of $168 in taxes. So that's not significant, not by any stretch of the imagination. Let's take $50,000 of IRA distributions, and then you pay $724. So I mean, you're talking about a 1%. Yeah, that's 1%. As we talked about at the very beginning of this episode, and basically 1%. I'm curious. Let's raise this Social Security to $50,000 there as well. So $100,000, of which 50 comes from Social Security, 50 comes from IRAs. You're paying off $724. So for those folks in about the $100,000 or lower tax or income stream, your tax bill isn't high. It's just not. And so yes, I know they have high taxes for those on the upper edge of income. Mostly going to be employees, though. A lot of retirees aren't going to be in that category. So that's what I'm saying. It's not as bad as people make. If I retire from California now, $100,000 of income, I'm not going to pay a huge amount of money in taxes. You're just not. So let's do this. So let's say we have 25,000 Social Security, 50,000 from an IRA, 25,000 from a private pension, and we'll show you the jump. Show you how much more. Yeah, see, that doubles your tax right there. So again, my friends, it all comes back to where your income comes from. Your tax is more than doubled because you had your money coming from from a pension as opposed from Social Security. So just, I'm telling you, you got to look at Social Security as a significant way to save taxes on top of everything else. No, I hope this helps, actually. I mean, so it is relatively surprising that California is not nearly as bad as what has been perceived. I mean, it's bad. Don't get me wrong. You're going to get hammered on sales tax for sure. And once you start making some good money, you're going to get hammered on income tax as well. But if you can do some things on the income tax with Social Security planning, Roth IRAs and things like that, that you can't do when it comes to sales tax. Sales tax is the sales tax. Property tax is the property tax. But from an income tax perspective, you have some opportunity to prevent some of these taxation. And so you need to be taking advantage of that now. Do not wait until you draw your Social Security check. By then it's too late. All right, so if this helps, give me a thumbs up. As always, don't forget to subscribe to that little red button down there, right there on the right-hand side. Not very conspicuous. I don't know why they don't make it bigger. And then hit the notification bell to be notified of future content. And of course, put comments down below. Love to hear what you say, especially when it comes to California, the home of 10% of all the U.S.'s retirees. 10% in this one state. It's pretty amazing. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.